The course itself, Market Risk, is split into two parts. I teach the first half, which primarily focuses on risk as seen from the trading floor. So it focuses on hedging the risk and acting with it. So it focuses on Greeks and P&L and how one trades their book and manages their book on a day-to-day basis. The second half of the course is really seen from risk from an oversight perspective. So that's much more applicable to portfolios of equities and portfolio management. So for students that decide to take the risk management stream, this allows them to really get their hands dirty into the more technical aspects of finance and of risk management in particular. Whereas for students even that are taking the portfolio management side of things, if you're being involved in managing any sort of portfolio, aspects of risk are always going to be front and foremost on what you're doing. Even if you're holding on to equity, that equity holds risk, and one has to ask themselves the questions of what are they going to do with these things. The intention of this course from the very start and how I've designed the curriculum has been based on someone coming from a practitioner from the market that's come here to really explain to students what it's like in the market. So it's built all around what tools are actually used. The entire set that I teach is geared in a way to prepare students for the industry. The focus of the instruments that we're looking at in this course are primarily derivatives, but we look at more simple stuff, and the techniques that we apply can be used more generally than just derivatives themselves. So we look at options and across different asset classes, interest rates, equities, and FX, but they apply equally to credit and can be generalized. We focus on kind of the core with which students can then, if they're interested and want to pursue more in this, can build up from that core. What we do, and the way that I treat my half of the course, is to do it as an intensive workshop. So I have the students for a week solid. In the mornings I give lectures, and in the afternoon I work them as basically what we used to call lab sessions. So I used to teach physics way back in the day, and we run physics labs. So now basically it's a hands-on workshop where they're building in Excel and Visual Basic a prototype to do risk management that's seen, something very similar is seen pretty much on every trader's desk all over the street and in the City of London. My approach to teaching is basically the best way to learn is by doing. So the students are coding, they're answering questions by answering things in Excel, writing equations, drawing graphs, drawing pictures. It stimulates a lot of work together, and so they learn by having discussions with each other to try to work things out, answering questions back and forth with me. For some people, they feel quite confident, they'll ask questions. But for a lot of other students who are a bit more shy, I've found that the afternoon sessions give a chance by which there's an intimate level where they can just ask questions where it's just the two of us, and then we can sit down and draw things on paper and really walk through equations. And I think that this gives them an opportunity, and everybody an opportunity, to get involved. The grading of the course is split essentially by the topic. The first topic, risk for traders, takes 50%, and the second topic, risk for portfolio management, risk for control, also takes 50%. Within my half, it breaks down 50-50 again between assignments, which are effectively these hands-on lab work that we do in class, and the midterm. So the midterm only contains the first half of the material, and in the second course, I think again it's broken down 50% in assignments that are done on a weekly basis in that course, because it takes a more typical lecture assignment format, and then a final. Students touch on material that is going to prepare them from trading to doing quantitative research, to doing middle office or back office work. It will help them gear up for working in an investment bank, or working in a hedge fund, to a pension fund, to working in a proprietary trading fund, and trading on their own. The same core techniques apply, and the idea here is to empower students to be able to get their hands dirty so that they can actually build these things up themselves, and they have the feeling that they can do it themselves.